Wescott's Economic and Market Outlook for February 5th, 2021. I'm Mark McCarron, Wescott's Chief Investment Officer. And this morning, we'd like to talk a little bit about the emerging signs that we're seeing of economic recovery. We're seeing that in the US, we're seeing it abroad, and these are good signs, and the market is reacting quite nicely to them. So as we typically do, we want to talk a little bit about the key trends that we're seeing in February. First, we got our GDP growth number for the fourth quarter of last year, and it does show a recovery for the quarter anyway. And while the GDP number was negative for 2020, there's clear evidence that economic conditions, whether you look at manufacturing or even services recently, are improving. And as additional vaccines are approved for use, we'd expect the accelerated distribution of those vaccines in the spring of this year, and that will continue to push economic recovery really for the second half of this year. In addition to that, we're reading in the news this week that Congress is making progress on the approval of the latest, this latest bill, $1.9 trillion COVID-19 relief bill, which is expected to provide additional unemployment benefits, direct payments to qualified households, and again, support for small businesses. This is to tide everyone over until the vaccine distribution is widespread and the economy can fully reopen. And then the final piece of good news is the job market is improving again. We learned today that 49,000 new jobs were added in January of this year. And this comes after really a stalled couple of months in late November and December following a spike in new cases. The fact that we're going back to positive job growth bodes well for economic recovery later this year as well. And we're actually seeing that the unemployment rate fell to 6.3%. So these are all the emerging signs that we are recovering. We're improving, we're healing as an economy. So what we're seeing in the market is evidence of that coming through and what the driving factors are of the portfolio of the markets and also of Wescott portfolios. So first of all, optimism for the eventual reopening of the economy is definitely driving small companies. If you remember last year, we talked a lot about how concentrated the market was. Well, what we're finding this year so far is that while the S&P 500 is up in absolute terms, that's the blue line, the orange line shows that small companies are leading the way, which is a very different storyline, very different dynamic, and really related to this economic reopening trade. We've been talking about it for many months now. In fact, the shift in market leadership began in late 2020 as the vaccines were announced and effectively making an improving economy, an improving world, if you will, right around the corner, which is great. So the economy and the financial markets have been supported so far last year, and we expect this year by very aggressive fiscal and monetary stimulus. The monetary stimulus, just a reminder, is low interest rates. The fiscal stimulus is the COVID relief bills that we're talking about, the third one being negotiated today in Congress. So this support, combined with the fact that households really stopped spending on travel and leisure and other things, has actually led to many households having excess savings. And what that means today is that there's a pent-up demand that we expect would help drive consumer spending in the second half of this year. And our Wescott portfolios, the way we've constructed them, we feel are well positioned to benefit from this pent-up demand as the rest of the market participates in that recovery. So that's the big trends. An update on the market wouldn't be complete, though, if we didn't cover the frenzied trading that we saw last week in GameStop. GameStop, for those of you who are watching the news, small cap company with relatively poor fundamentals, although it caught the attention of Wall Street and Main Street. So a short synopsis, online traders, coordinated buying activity via a Reddit Wall Street Bets forum. This is an online forum. And the objective of the forum was to squeeze the hedge fund managers who were betting that the company's stock would continue to decline based on those poor fundamentals. Well, what happened, we've got the same graph here, by the way, on the right-hand side of small companies and large companies, but we've superimposed the performance of GameStop. And you can see how crazy it is. In fact, we had to create a second axis here. And yes, this is percent return. So GameStop at one point was up 1,800% in a matter of days. And that is very unusual trading. Clearly indicates that there's what's called a squeeze. So when there's a position by hedge funds out there that expected to decline, they can short the stock, but the stock starts to rise, they have to cover that position. And that's what forced GameStop, which is a relatively unknown small company, to become up 18% in a few days, 1,800% in a few days. Well, you can see that has come back very strongly only a few days later. And it did highlight some questions that the U.S. regulators, including the Treasury Department and the Securities and Exchange Commission, evaluated whether the infrastructure surrounding last week's volatility was a problem or not, and could this happen in other places? They felt that despite what happened with GameStop, the general infrastructure is sound and resilient, and it's unlikely that this will happen to a large company, and it's sort of a one-off situation. But I think as a reminder, what does it mean to us? Wescott portfolios are balanced and diversified, and we're not impacted by last week's trading in GameStop stock in any way. And that's really important to note, that while there's a lot of activity out there in the market and headlines, the portfolios we're building for you remain balanced, stable, and resilient. So we wanted to end this update with just a quick outlook, a reminder that the latest fiscal stimulus that's being proposed should continue to support household spending and business spending until a vaccine is fully available. Investor sentiment has clearly turned positive as we start 2021, but there is some evidence of overvaluation, hype, and froth in certain segments of the market, and I would consider GameStop as evidence of that hype that we're seeing. So we have to be careful about that. And as always, Wescott's portfolio strategy continues to emphasize diversification by region, so US, non-US, and emerging markets, investment style, value, and growth, and company size, large companies and small companies, because we think that provides a smoother ride over time, and ultimately enables you to reach your long-term objectives. So with that, we want to thank you again for joining us. Thank you for your continued trust and confidence. Don't hesitate to reach out to me or to your advisor if you have any questions. Thank you.